Whether you're planning to buy a house, finance a car, or take out a loan, your credit score can make or break your ability to secure favorable terms. But how can you raise your credit score? What if I told you that achieving your dream credit score is within your reach? That's right. There is no need to settle for credit that is average or poor. In this video, I will talk about 4 proven strategies that will skyrocket your credit score and open doors you never thought possible. Having a good credit score is essential for several reasons. Firstly, it will increase your chances of being approved for credit. Whether you're applying for a mortgage, car loan, or credit card, lenders will assess your creditworthiness before making a decision. A higher score gives you a better chance of securing the credit you need. Secondly, a good credit score can save you money. In most cases, if you have excellent credit, lenders will offer you more favorable terms, such as lower interest rates and higher credit limits. This means you'll pay less in interest and have more access to credit, allowing you to achieve your financial goals more easily. Finally, a good credit score can also impact other areas of your life. Landlords often check credit scores when considering rental applications, and employers may use credit checks as part of their hiring process. In one word, a positive credit history can give you an advantage in these situations. Now, let's talk about the factors that affect credit scores. To raise your credit score, you have to understand the factors that can negatively impact it. Late or missed payments, high credit card balances, and a short credit history can all lower your score. To avoid their effects, it is important to be aware of these factors and take the right steps. Late or missed payments can significantly damage your credit score. Even one late payment can stay on your credit report for up to 7 years. To avoid this, make it a priority to pay your bills on time. Set up automatic payments or reminders to ensure you never miss a due date. High credit card balances can also harm your credit score. Try to keep your credit utilization below 30% by paying off balances or requesting credit limit increases. This shows lenders that you can responsibly manage credit and reduces the risk of default. A short credit history can be another obstacle to a good credit score. If you're new to credit or have limited credit history, consider becoming an authorized user on someone else's credit card or applying for a secured credit card. These strategies can help you build a positive credit history over time. Now that you understand the factors that affect your credit score, let's explore some practical steps you can take to raise it. Reduce credit card debt. One of the most important factors in your credit score is your credit utilization, which is the percentage of your available credit that you're using. For example, if you have a credit card with a $1,000 limit and a $500 balance, your credit utilization is 50%. The lower your credit utilization, the better for your score, because it shows that you're not relying too much on borrowed money. A good rule of thumb is to keep your credit utilization below 30%, but the lower, the better. The highest scorers tend to have credit utilization in the single digits. To lower your credit utilization, you need to pay down your credit card balances as much as you can. This will also save you money on interest charges. You can also try to increase your credit limit by asking your card issuer for a higher limit or opening a new card. This will increase your available credit and lower your credit utilization ratio as long as you don't increase your spending. However, be careful not to apply for too many new cards at once, as this can hurt your score by generating hard inquiries on your credit report. Pay bills on time. Another key factor in your credit score is your payment history, which accounts for 35% of your score. This shows how well you've managed your debt obligations in the past and whether you've paid your bills on time or not. Late or missed payments can have a negative impact on your score, especially if they're recent or frequent. To improve your payment history, you need to pay all your bills on time every time. This includes not only your credit cards and loans, but also your rent, utilities, phone, and any other recurring bills. If you have trouble remembering due dates, you can set up automatic payments or calendar reminders to avoid missing a payment. You can also sign up for free credit monitoring with NerdWallet to track your payment history and get alerts if anything changes. If you have any past due accounts, you should try to bring them current as soon as possible. Depending on the type of account and how late it is, you may be able to negotiate a payment plan or a settlement with your creditor. You can also ask them to remove the late payment from your credit report as a goodwill gesture, but they're not obligated to do so. Check your credit report for errors. Your credit score is based on the information in your credit reports, which are maintained by the 3 major credit bureaus: Experian, Equifax, and TransUnion. Sometimes, these reports may contain errors or inaccuracies that can lower your score, such as duplicate accounts, incorrect balances, or fraudulent activity. To fix these errors, you need to check your credit reports regularly and dispute any mistakes you find. You can get a free copy of your credit report from each bureau once a year at annualcreditreport.com. You can also get your free credit report and score from Credit Karma, which updates weekly. If you find an error on your credit report, you can file a dispute online, by phone, or by mail with the bureau that reported it. You'll need to provide evidence to support your claim, such as a copy of your statement, a receipt, or a letter from your creditor. The bureau will investigate your dispute and correct or remove the error if it's verified. This process can take up to 30 days, but sometimes it can be faster. Build a positive credit history. If you have a thin or limited credit history, meaning you don't have many or any accounts on your credit report, your score may be low or non-existent. This can make it hard for lenders to assess your creditworthiness and approve you for new credit. To build or improve your credit history, you need to add some positive information to your credit report, such as on-time payments and low balances. One way to do this is to use a secured credit card, which is a type of card that requires a security deposit that acts as your credit limit. You can use the card like a regular credit card, and your activity will be reported to the credit bureaus. As long as you pay your bill on time and in full every month, you'll be able to build a positive payment history and boost your score. You may also be able to upgrade to an unsecured card after a few months of responsible use. Another way to add positive credit history is to become an authorized user on someone else's credit card account, such as a family member or a friend. This means you'll get a card linked to their account, and their activity will show up on your credit report. If they have a good credit history, this can help your score. However, you need to make sure they trust you to use the card responsibly, and you need to trust them to pay their bills on time and keep their balance low. You can also get credit for your rent and utility payments, which are usually not reported to the credit bureaus. You can sign up for a service like Experian Boost or Rent Reporters, which will verify your payments and add them to your credit report. This can increase your score by adding more positive information and diversifying your credit mix, which is another factor in your score. Raising your credit score is not impossible, but it does require some time and effort. By following these tips, you can improve your score in 30 days or less and enjoy the benefits of having good credit. Remember, your credit score is not a static number, but a dynamic reflection of your financial behavior. To maintain or increase your score, you need to keep up the good habits and monitor your credit regularly. This way, you'll be able to achieve your financial goals and secure your financial future.